All right, if you're an investor following Tempest AI, you need to listen up. The company just hit a massive inflection point. After 10 long years, they've finally flipped a critical switch on profitability, and it signals a fundamental change in their story. We're going to break down exactly how they pulled it off and, more importantly, what it means for the stock from here.
And you don't have to take my word for it. That's the message coming straight from the top. CEO Eric Lefkowski was, beaming with confidence on their earnings call, and frankly, he had every reason to be. The numbers this quarter are telling a new story. So let's get right to the headline number, the one that changes everything. And there it is, $1.5 million. For the very first time in its history, Tempest has posted a positive adjusted EBITDA. Now, for those of you who aren't accountants, just think of this as a stand-in for the real, core profitability of the business. This is no accounting gimmick, it's a huge strategic milestone. It means they've finally pivoted from a decade of burning cash to actually generating it.
Now, here's what makes this profitability pivot so incredible. They managed to do this while swallowing millions in new costs from their big acquisition of Paige, the digital pathology company. That shows some serious operating leverage. It means the core business isn't just paying for itself anymore, it's strong enough to fund their aggressive M&A strategy too.
So, this brings us to the million-dollar question for every investor watching, right? Was this just a fluke, a one-time thing, or is this the start of a real sustainable trend? Well, to figure that out, we've got to pop the hood and look at the engines that are making this thing go.
So, how do they do it? Well, it really comes down to this powerful one-two punch. On one hand, you've got the high-volume genomics business. That's the muscle. It brings in tons of revenue and all the raw data. And on the other hand, you have the super high-margin data business. That's the brain. Let's see how they work in tandem. And this lays it out perfectly. They're totally symbiotic. The genomics testing creates the scale and feeds the beast. Then, that data business spits out the high-margin, recurring revenue and builds this massive competitive moat that becomes almost impossible for anyone else to cross.
Now check out these numbers. The growth in testing volume was, and I'm quoting the CEO here, super strong. Oncology is up 27%, and the new hereditary cancer business up a staggering 37%. Management was really clear on this. This isn't some market tailwind. This is durable growth because their sales force is just getting better and more efficient. Okay, but then you look at the other side of the business, the data side, and it's even crazier. They booked $150 million in new contract value this quarter alone. That shows you just how hungry pharma companies are for Tempest's unique data. This is the high-octane, high-margin fuel that's going to power the company's future profits.
So we've covered the what, the incredible growth. Now let's talk about the how. See, Tempest isn't just sitting back and letting the business grow on its own. They're on an aggressive shopping spree, buying up key companies and data assets to build out their grand vision for an AI-powered future.
I mean, just look at the pace here. This isn't random. Each one of these deals is a strategic puzzle piece. They're adding cardiology data, hereditary cancer data, clinical trial tech, and now digital pathology AI. They're systematically building the most comprehensive data library in medicine, bar none.
And these are not small bets. We're not talking about chump change. Take the Ambry deal, over $375 million in cash, plus stock. They're literally spending hundreds of millions to build an impenetrable data fortress and to push into new areas of medicine. That tells you everything about their ambition.
All right, another absolutely critical pillar of their strategy, locking in these massive, long-term deals with Big Pharma. And you have to understand, these aren't just sales orders. They are deep, multi-year collaborations that serve as the ultimate validation for the entire Tempest platform.
And the scale here is just jaw-dropping. We are talking about multi-year commitments in the hundreds of millions of dollars. For a company like AstraZeneca or GSK to commit over $200 million, they have to be absolutely convinced that Tempest's data is the key to finding their next multi-billion-dollar drug. It's the best seal of approval you can get.
And this quote from the CEO, it just nails the whole strategy. He's saying the gap between them and everyone else is not just big, it's getting wider. They're pulling away from the pack. And frankly, the bookings numbers and these massive pharma deals, well, they seem to prove he's right.
Okay, but as any smart investor knows, it's not all sunshine and rainbows. You have to look at the other side of the coin. So let's be disciplined and walk through the real risks here, the Wall Street bear case that could derail this whole story.
First and foremost, you can't ignore this number. That's a 2 followed by a 0.3 followed by a B. $2.3 billion. That's the hole they've dug so far to build this platform. The recent profitability is a fantastic first step, but that long history of burning cash is a major overhang.
And then there's the legal drama. They're locked in a nasty, expensive patent war with a huge competitor, Guardant Health. This is a big deal. An ugly outcome here could mean massive fines, or even worse, having to pull some of their key liquid biopsy products from the market. That would be a direct hit to a huge future growth driver.
So let's bring it all home. We've seen the good, the profitability pivot, the roaring growth engines. We've seen the risks, the cash burn, the lawsuits. So, what is the ultimate vision here? What's the big idea that Tempest is selling to Wall Street?
Because it all comes down to this single question. Their lab testing business is great, but it's a tough, labor-intensive business. The real explosive upside, the thing that gets you those juicy software-like profit margins, well, that's not going to come from the wet lab. It's going to come from the dry lab, from the AI itself.
And you absolutely have to hear this quote from the CEO because it's the entire moonshot thesis in a nutshell. He calls it their Nvidia Moment. Think about that. Unlike a lab test, software, an AI algorithm can scale to $1 billion in revenue almost overnight with very little cost. It's pure, high-margin, textile growth. That's the ultimate price.
The vehicle to get them there is this idea they call intelligent diagnostics. And really, it's a simple concept. Instead of just giving a doctor one data point from a lab test, you use AI to analyze everything, the patient's genes, their clinical records, their CT scans, to give a far smarter, more personalized, more powerful answer.
So this isn't just some vague dream. They have a clear 4-step playbook to hit their aggressive goal of 25% annual growth. Step 1, keep the core lab business humming. Step 2, keep signing those massive data deals. Step 3, make their acquisitions work. And Step 4, the big one, finally crack the code on getting paid for their AI algorithms. And that brings us right to the final verdict, the question you as an investor have to answer. After seeing this pivot, this growth, this strategy, what is Tempest really? Is it just a diagnostics company with a cool tech hobby? Or is it a genuine AI-first powerhouse that's on the verge of redefining medicine as we know it? That is the bet you're making.